Have you ever looked at a company's financial report and wondered if it holds secret clues about the future of healthcare? Maybe even how you might be managing your own health, say, in the next few years.
It's a fascinating thought, isn't it?
Well, get ready to discover some surprising insights. Welcome to the Deep Dive, where we take your source material and, well, distill it into essential knowledge. Today, we're doing a deep dive into the latest from a recent earnings call and press release from Quest Diagnostics. We're looking at their second quarter of 2025.
Right. And our mission today really is to pull out the most important nuggets of knowledge and maybe some surprising facts about what's really driving growth in this diagnostic information services sector. And crucially, how these trends impact the broader healthcare landscape for you, the listener.
Yeah, exactly.
We'll aim to give you a clear understanding of Quest's performance, their strategic direction, and, how those external factors are shaping its future. Insights you probably won't get just from the headlines.
All right, let's jump right into the numbers then. Quest Diagnostics had a truly robust Q2 2025. Their total revenue shot up to $2.76 billion. That's a remarkable 15.2% increase from last year.
Wow, 15.2% is
It
significant.
is, and they had solid organic growth driving that too. Their profitability per share, the adjusted EPS number people watched, jumped over 11%, hit $2.62.
Uh,
And critically, their cash flow from operations, this one's pretty eye-popping, up an astounding 67.1% year-to-date, reaching $858 million.
okay, 67%. That's huge.
Yeah, these aren't just big numbers. They really paint a picture of a company with some serious momentum right now.
They certainly do. And these figures, they tell a compelling story about more than just Quest itself, really. The growth in their core diagnostic information services revenues specifically was up 15.7%, and the total volume of tests measured by requisitions increased by 16.3%.
Oh, okay.
Organically, volume was up a solid 2.1%. Now, you might notice revenue per requisition was down slightly overall by 0.4%.
Ah, okay, I saw that. Why was that?
Yeah, that's primarily due to the Life Labs acquisition. They just have a different pricing structure, different mix. But organically, revenue per requisition was actually up a healthy 3.3%.
Ah, that's the key number then.
Exactly. That's a crucial insight. It means people are ordering, more complex or maybe higher value tests and ordering more tests per visit. It suggests a shift in behavior, both for patients and physicians. And this strong top-line growth isn't just about more tests, it's also connected to productivity gains. They've been strategically deploying automation, digitization, other advanced tech.
Makes sense.
Yeah, and this performance led Quest to raise its full year 2025 guidance. Revenue is now expected between $10.8 billion and $10.92 billion. Adjusted EPS between $9.63 and $9.83. It signals real confidence in continued market demand.
Okay, let's unpack this a bit more. We've covered those pretty impressive financial results and what they signal about demand. Now let's get into the how. How exactly is Quest achieving this kind of growth? They're clearly focused on a core strategy, delivering innovative solutions, meeting customer needs. But is that organic innovation enough on its own? Or are strategic acquisitions still, absolutely critical for a company this size to keep its edge?
That's an excellent question, and it really gets to the heart of their strategy, doesn't it?
Okay.
It's definitely a multi-pronged approach, kind of revolving around three key pillars. First, innovative solutions and advanced diagnostics. This is all about pushing the boundaries of what diagnostics can actually do.
Okay.
They're focusing on 5 key clinical areas. We're talking advanced cardiometabolic testing that includes metabolic, endocrine, chronic kidney disease stuff, basically trying to get ahead of chronic conditions.
Proactive stuff.
Exactly. Then there's autoimmune, where they're leveraging specialized analyzer solutions. Brain health is a huge one. Specifically, their AD-Detect blood test for Alzheimer's disease.
Right, I've heard about that. Less invasive, earlier screening potential.
Precisely. And they even launched a new panel recently that looks at specific protein markers, AB4240 and pTau217, offering even more detailed insights. In oncology, the Haystack MRD test is gaining traction. MRD stands for minimal residual disease.
Right, looking for tiny cancer remnants after treatment.
Exactly. It's super sensitive. A recent New England Journal of Medicine study affirmed its high sensitivity in identifying complete response to immunotherapy, potentially months before standard imaging would pick it up.
Wow.
So,
That could really change things.
it could. The insight there is how early detection might revolutionize care. Quicker treatment adjustments, maybe better prognosis. And finally, women's and reproductive health. That includes a new women's hormone panel on their consumer website, questhealth.com, plus things like NIPT, non-invasive prenatal testing, and query genetic screening.
Okay.
And it's worth noting, these advanced diagnostic tests, they're seeing double-digit revenue growth. They provide clearer, earlier answers. That's the value prop.
That's impressive innovation across so many areas. But back to my question, are they mostly developing these tests themselves in-house, or are acquisitions really fundamental to building out this portfolio? What's pillar number 2?
Acquisitions are absolutely fundamental. Pillar 2 is strategic acquisitions.
Okay.
These are proving to be a key growth driver, particularly what they call accretive outreach purchases and buying independent labs. The Life Labs acquisition is a prime example. It contributed roughly 8% of Quest's 10% M&A revenue growth in Q2 alone.
So a big chunk.
A very big chunk. And Life Labs' operating margin is actually on track to reach parity with Quest's overall rates within just a couple of years, which is excellent progress.
That's fast integration.
It is. And it's not just about financial synergy, squeezing costs. It's driven by strong management procurement synergy, sure, but also a mutual exchange of operational know-how. It's genuinely a two-way street. Both companies seem to be learning from each other to improve.
That's fascinating. A genuinely symbiotic relationship, not just a takeover. Okay, so with innovation and smart acquisitions driving growth, what's the final piece? The third pillar that helps deliver these solutions efficiently?
The third pillar is operational excellence. This is about running the engine smoothly and efficiently.
Right.
They have this program called Invigorate, which targets about 3% annual cost savings and productivity improvements.
Okay, how do they do that?
Well, they're deploying concrete technologies to make things faster, more accurate for your results. For instance, their front-end automation solution, it dramatically speeds up the initial processing of samples. Think super efficient sorting, labeling, getting samples ready for testing. That's already installed in half a dozen sites. They also had a successful pilot of an automated accessioning platform at their Big Clifton lab. That streamlines how new samples are logged in and tracked.
So less manual handling, fewer potential errors.
Exactly. And both of these solutions are planned for rollout across their lab network through 2026. Another big factor here, boosting productivity, is improved employee retention. It's nearing pre-pandemic levels, kind of mid-teens turnover.
That makes a difference.
It really does. More stability means more experienced staff, which generally leads to fewer errors and just more efficient operations overall.
So let's bring this back to the listener. What does all this mean for you? How are these strategies, the innovation, the acquisitions, the efficiency drives, how are they translating into better access and service? How does it impact how you interact with the diagnostic services?
That's a great question, because this is really where the rubber meets the road for the user experience. Right?
Yeah.
Okay, let's look at the channels. In the physician channel, revenue grew about 20%. That was driven by both acquisitions and, importantly, high single-digit organic growth. And that was fueled by increased demand for those innovative solutions we talked about, and also more tests being ordered per requisition. Doctors are seeing the value in more comprehensive panels. And for large enterprise accounts in functional medicine, they're seeing robust growth there too, specifically in functional medicine.
Functional medicine. Explain that a bit more.
Sure. It's a rapidly growing area of preventative healthcare. Providers often order a really wide range of lab tests. Things like hormone levels, detailed cardiometabolic markers, general chemistry panels. The goal is to identify and act on multiple health risks early, often treating patients holistically through nutrition, exercise, sleep, supplements.
Right, looking at the whole system.
Exactly. And what's fascinating here, and maybe a bit unusual, is how popular podcasters, like Peter Attia, Rich Roll, Andrew Huberman, they're essentially generating free marketing for specific tests Quest offers, things like APOB and LP(a).
Huh. Really? So people hear about these tests on podcasts and ask their doctors?
It seems that way. It's driving significant demand. It's less about Quest actively capitalizing on specific podcasters, I think, and more about recognizing and responding to this clear consumer shift towards proactive health management. People hear about these markers, they get interested, they want to know their numbers. Quest needs to be ready to meet that demand.
That's a unique angle. Shows how public interest and media can influence healthcare directly. What about other channels? Hospitals, direct to consumer.
Good question. In the hospital channel, they saw low single-digit revenue growth. That's mainly driven by collaborative lab solutions.
Yeah.
Hospitals are increasingly choosing Quest.
Why?
Well, often to address their own financial pressures, and also the ongoing shortages of skilled lab technologists. They're looking for Quest's expertise, their innovation pipeline, and just general efficiency.
Okay, outsourcing basically.
In many cases, yeah, we're managing the lab for them.
Mm.
And in the consumer channel, growth continues to be strong. That includes that new women's hormone panel on questhealth.com we mentioned earlier. They actually just fulfilled their 1 millionth customer order since that direct-to-consumer platform launched back in fall 2022.
1 million orders, wow.
Yeah, it really demonstrates strong consumer demand for direct access to health information and testing. It empowers you, the individual, to take a more active role.
Definitely a friend there.
For sure. Quest also gained expanded access and utilization through new health plan partnerships. Elevance and Centene came online effective January 1st. That provided access for over 1 million new people in states like Nevada, Colorado, West Virginia, Georgia. And that drove a steady increase in utilization from Q1 into Q2. Q2 also saw a bounce back from some weather impacts they had in Q1.
Oh, okay.
And finally, just touching on public health needs, Quest continues to be involved there. They recently launched a molecular test for diagnosing Oroposh virus, developed under a CDC contract. Shows their role in responding to broader health challenges, too.
Okay, so impressive internal performance, expanding reach. But it's crucial to understand the external forces, too, right? What are the potential headwinds, particularly, the stuff coming out of Washington? How's Quest navigating that?
Excellent point. Yeah, it's crucial to understand that broader context. Let's start with the Washington backdrop and the so-called One Big Beautiful Bill. To put it in perspective, the goal of that bill is removing about $1 trillion from a projected $62 trillion U.S. healthcare spend over 10 years. So that's about, 1.5%?
Okay. So how does that potentially hit Quest?
Well, looking at Medicaid, they project no material impact in 2026 and actually immaterial impact in 2027, mostly due to the time it takes states to react and adapt their programs.
Right. And the exchange plans, like ACA plans.
Right. Currently, no more than maybe 4 or 5% of Quest's revenue comes from the exchange market. Their worst-case estimate is no more than a 30-40 basis point impact on their volume in 2026.
Okay, so manageable, it sounds like.
They believe so. And it's important to remember, they point out that most people on exchange plans do have income. So if subsidies change significantly, they can likely find alternative coverage, maybe higher premium plans, maybe employer plans. It might mitigate the sort of uninsured cliff impact some might worry about. And just to be clear, this is an impartial analysis based on what Quest reported, not an endorsement of any specific policy, just explaining their view of the impact.
Understood. Okay, what about PAMA? That's always a looming concern for the diagnostics industry, isn't it? Those potential Medicare reimbursement cuts.
Indeed. Yeah, PAMA, the Protecting Access to Medicare Act, is a perennial issue. Quest is tackling this on 2 fronts. First, pushing for PAMA reform. There's legislation apparently being drafted that has strong bipartisan support, aiming for a long-term fix. Second, they're pushing for a 6th delay in the next round of cuts.
Okay, 6th delay. They keep kicking the can down the road.
Pretty much. But if no deferral or permanent fix happens this time, the potential financial hit is around $100 million in pricing impact for Quest. Yeah. They expect to offset a portion of that through various actions, but probably not the majority. It highlights that ongoing challenge of navigating government reimbursement policy.
Definitely. Any other external factors? Tariffs? Supply chain stuff?
Yeah, tariffs. Primarily from Europe and China. There was some impact in Q2, and they expect it to continue in Q3 and Q4. But they described it as manageable within guidance.
How so?
Well, context is key. About 80% of their $2 billion annual spend is actually in the U.S. Less than 1% comes from China. They've already shifted most of that away.
Right.
And the remaining 20% is spread globally, mostly from Europe. They have long-term contracts, alternate sourcing options, including U.S. manufacturers, which gives them stability. It just reflects the complexity of global supply chains that ultimately affect test costs.
That's a really thorough approach to managing those external risks, but a strong company also invests internally, right? Are they making big investments now to prepare for the future? Maybe things that will ultimately benefit you, the consumer.
Absolutely. They are making significant internal investments. There's a big initiative called Project Nova.
Project Nova sounds futuristic.
It kind of is for them. It's a major project to completely overhaul and modernize their entire business process. Everything from when a test is ordered right through to when payment is received.
So the whole order-to-cash cycle.
Exactly. Think of it as a massive digital transformation. The aim is to make their whole operation more efficient, more seamless, both for customers like hospitals and doctors, and indirectly for patients too. The bulk of the spending for Nova is actually happening in the second half of this year, 2025. They estimate it's about $0.20 per share impact.
That's hefty investment.
It is. But even with these substantial investments and, ongoing wage inflation still running around 3–4%, their operating margin is still expected to expand year over year.
Impressive.
Yeah, it really demonstrates effective cost management and those productivity gains we talked about, even when facing headwinds.
Okay, so let's wrap this up. What does this all mean for us? Quest Diagnostics is clearly showing, well, really robust growth. It's driven by strategic innovation and testing, successful acquisitions like Life Labs, and these significant operational improvements, which hopefully mean faster, more accurate results for you.
Exactly. And they're actively navigating these external challenges, healthcare policy changes, tariffs with seemingly well-defined plans to mitigate the impacts, not just on their business, but by extension on the broader healthcare system that you rely on.
This deep dive really shows you how a major player in diagnostics is adapting to this rapidly evolving healthcare landscape, doesn't it?
It really does. And their focus on prevention, wellness, and particularly consumer empowerment. It highlights a significant shift. It directly impacts the quality and the accessibility of healthcare available to you, pushing the boundaries of what diagnostics can achieve.
So, as you think about all this, maybe consider how this increasing demand for advanced diagnostics, especially in areas like functional medicine and brain health, we discussed how that reflects a broader societal shift, a move towards more personalized preventative care. What will this mean for how you approach your own health and wellness in the coming years? Will you find yourself becoming even more proactive, maybe seeking out specific tests to monitor your health more closely? Something to think about.